If your car insurance went up by $50, $100, even $200 a month, and you didn't crash, didn't get a ticket, didn't change cars, this video's for you. Because there's one normal thing almost everyone does with car insurance that quietly overcharges you year after year. And the craziest part? Fixing it usually takes less than 1 hour, and it can literally save you $1,000 plus a year, depending on your state, your car, and your policy. Today, I'm going to show you the mistake, why insurance companies love it, and the exact checklist to stop overpaying without doing anything risky or illegal. Let's be clear, I'm not talking about skipping coverage, doing shady tricks, or driving uninsured. I'm talking about something responsible people do, busy people do, people with autopay do. The mistake is simple. You treat car insurance like a utility, and you let it auto-renew without reshopping and rechecking the policy. Most people set it once, then forget it for years, and insurance pricing is designed to punish that behavior. The normal mistake. Here's what normal looks like. Your policy renews every 6 months, sometimes 12. The insurer sends a renewal notice. The premium is higher. You shrug and think, inflation, cars are expensive, repairs cost more, I guess this is normal. Autopay hits, life moves on. That's it. That's the trap. Because insurance companies know most customers won't leave even if the price creeps up. Why this costs so much? Car insurance isn't priced like groceries, it's priced like a behavioral game. Insurers use complex pricing models that adjust constantly based on your zip code and local claims rates, your vehicle's repair costs, medical costs in your area, theft rates, weather events, litigation trends, and yes, sometimes your credit-based insurance score, allowed in many states. So premiums can rise even if you're a perfect driver. But here's the part people miss. Many companies price new customers more aggressively than existing customers. So the person who switches in today might get a lower rate than the loyal customer who stayed and auto-renewed. Not always, not in every state, but often enough that it's worth checking because you don't get rewarded for inertia. Think of it like this. If you never negotiate your salary, you usually fall behind. Car insurance works the same way. Realistic example. Let's do simple math with a realistic scenario. Imagine you're paying $220 per month. That's $2,640 per year. You haven't shopped in 3 years. Your insurer bumps you at renewals, plus $15 per month, then plus $20 per month, then plus $25 per month. Now you're paying $280 per month, which is $3,360 per year. That's a $720 year increase without one accident. Now combine that with a second thing that happens when you set and forget. Your policy often becomes slightly misaligned with your life. Maybe you work from home now, but your mileage is still set high. Maybe you moved but never updated garaging. Maybe your deductible is still too low. Maybe you're paying for rental coverage you don't need. That's where the extra $300 to $800 per year hides. So yes, $1,000 per year can absolutely happen. The 4 silent overpayments that come with auto-renew. You stop being priced competitively. Even if your insurer isn't scamming you, you are no longer being actively competed for. You're paying the "I probably won't leave" price. Your mileage is wrong. Mileage is one of the easiest discounts to miss. If you went from commuting 12,000 to 15,000 miles per year to 6,000 to 8,000 because of remote work, you might be paying the old rate. Your deductible is stuck in the past. Many people pick a $500 or $250 deductible years ago and never revisit it. But if you have even a small emergency fund now, you might be able to raise that deductible to $1,000 and reduce the premium meaningfully. Not always, but often. You're paying for add-ons you don't need. Common ones, roadside assistance, you might already have it through your car, credit card, or AAA. Rental reimbursement, useful but not always worth the cost. Glass coverage, depends on state and windshield replacement cost. Low liability limits, this is the opposite problem, dangerous underinsurance. Auto-renew makes these invisible. How to fix it, the 30-minute policy reset checklist. Step 1. Audit your current policy in 10 minutes. Pull up your declarations page and check coverage limits, bodily injury liability, property damage liability. These matter, don't cheap out blindly. Deductibles, collision deductible, comprehensive deductible. Mileage, what does the policy think you drive annually? Drivers, anyone still listed who shouldn't be? Anyone missing who should be? Garaging address, where the car is actually parked overnight. Add-ons, rental, roadside, custom equipment, etc. Write these down. This is your apples-to-apples comparison sheet. Step 2. Shop it properly, 20 to 40 minutes. Shop at least 3 quotes, one comparison site for speed, one big national insurer directly, one local or regional insurer, often surprisingly competitive. Important rule: quote the same coverage limits and deductibles. If you change the policy, you're not comparing price, you're comparing a different product. Also, shop before renewal, ideally 2 to 4 weeks ahead. Step 3. Adjust the easy levers. These are the levers that often reduce cost without doing anything reckless. Update mileage, especially if remote or hybrid. Raise deductible only if you can cover it today. Ask about discounts, you often don't get them automatically. Multi-policy bundle, renters or home. Multi-car, safe driver/claims free. Defensive driving course, some states. Good student, if applicable. Telematics or usage-based, only if you drive safely. One note on telematics: it can save money for some people, but if you hard brake a lot, drive late, or drive aggressively, it can backfire. Don't guess, test carefully. What not to do. Important. To save money, some people do dumb things like dropping coverage they actually need. Here are 2 simple safety rules. Don't drop liability coverage to dangerously low levels. If you cause an accident, liability is what protects your future income. Don't drop collision or comprehensive if you can't replace the car. If your car gets totaled tomorrow, could you buy a replacement without going into bad debt? If the answer is no, keep the coverage. The tiny claim problem. Another normal behavior that raises premiums long-term: filing small claims. If you file a $900 claim, you might pay for it for years through higher premiums, lost discounts, or non-renewal risk depending on insurer and state. A good rule of thumb is, if you can pay it out of pocket without wrecking your finances, consider doing that, especially for small damage. If you want the simple plan, here it is. Put a calendar reminder 30 days before every renewal. Audit your policy in 10 minutes, quote 3 competitors, fix mileage, deductibles, and discounts, switch if the savings are real and coverage matches. That's it. This isn't about being extreme, it's about not donating money to the set-and-forget tax. The normal car insurance mistake is assuming loyalty and autopay will protect you. It won't. Insurance pricing changes constantly, and if you don't periodically force competition, you often become the easiest customer to raise prices on. If you want, comment your state, your current monthly premium, and whether you drive low mileage or high mileage, and I'll tell you the top 3 levers most likely to lower your rate in your situation.